do you think the trade issues are big enough to put the likes of the Federal Reserve on hold from its current rate hike timeline?
I think if it escalates from here, yes. I mean, this is a real risk. At the moment, it's a tail risk, but as you've heard all four big central bank governors talk about the risks if things change. So it's definitely something markets are keeping a very close eye on. I mean, you had last week was a very hawkish market, and yet 10-year was still, I mean, it traded through 290 today. So we'd expect a couple of weeks ago, the ECB kind of halting, the Fed kind of raising rates and talking about more. We would expect to go 3% no problem, but we're at 290, where the curve is down less than 40 basis points to 2s, 10s. People are a little bit concerned about growth.
Hey, Gareth, it's Hadley in Riyadh. Now, of course, this MSCI emerging market inclusion for Saudi Arabia, a lot of talk about what that's really going to mean for the country's economy. We've had $3 billion already in inflows since the start of this year, and off the back of a year of depression, really, in Saudi Arabia, in the sense that there was at least 100 million out of the country. So what do you think happens next for Saudi Arabia? How big is this really going to be?
Well, I'm not sure if it's going to be that massive, but it is very positive. I mean, I think there's been a lot of good work being done in Saudi Arabia, and the charm offensive from the prince has been fantastically received. So it's positive technicals in an EM market that's been struggling for some time. So when fundamentals are okay, valuation is looking better, technicals have been the problem, and now these kind of positive noise is good for the market. So I think for the broader market, very good. For Saudi, obviously, it's a positive.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.